Hey guys, welcome to another session of the Trader Skills Network. Trade your way to success. Tonight we're going to be, or today, depending where you are, we're going to be touching on support and resistance. So we've been keeping a little bit of tabs on the previous sessions that we've been looking at. We've been doing the Rapala, which is literally the polarity test, break up a previous structural support or resistance level, pull back in and a test. And as I've just said now, the support and resistance element's been probably the most vital element of trading, being a leading indicator opposed to a lagging indicator. A moving average, for example, is a lagging indicator. They use past information to basically indicate, will provide you with basically an indication of what's actually going, whereas support and resistance, as I'll show you in a minute, is a leading indicator. What you're actually doing there is you're actually using that data to basically predict future interaction with the market. So a little bit of a scenario where historical levels will become tested again in the future. So depending on whether it's going downwards, that'll become support that potentially become retested, or if it's going upwards, it'll be resistance is retested. But let me draw some pictures for you to give you a little bit of rundown on how this will work. As I said, if you've been tracking the previous sessions, you'll see how basically I've been drawing this up. So we're going to repeat a very similar session and as I said, try and focus on how to define support and resistance, and then we'll go have a look at the chart and try and break it down a little bit for you. Hey guys, so simply enough, we're going to create a trend, and the trend starts with basically a market making higher highs and higher lows. Okay, on the way up, basically the market makes a new high, it comes into some sort of resistance area. This may be a big number, previous structural high where market had interacted there before it basically meets with good strong selling, and the selling basically corrects this market somewhat, not all the way, as we've said. Now that would be a full correction, but sometimes it could obviously come all the way back to the X point, our starting point. But nevertheless, it retraces somewhat, usually about a third to 2/3 of the way, before it then starts to proceed to make a new high, and that previous left-hand high over here, this near-term resistance area, will basically be something that we'd all have our eyes on to see how the market deals with it before it proceeds to make a new high again. Okay, and once we get into that new high, depending on basically how the market's been moving away at this stage, the market will never be either run out of steam or come into some sort of resistance again, or some sort of big number, or to some selling pressure, news variation, etc. And the market will then proceed to start to correct again and retrace somewhat, and then basically it'll create or come in to meet with another support level, for example a big number once again on the way up, and buyers will basically decide whether this is now the start to a defined trend, and then we'll look to start to trade back into the market and buy longs, keeping an eye on basically what's going to interact with over there before it makes new highs to the upside over there. Now, on the way up, guys, what we basically are creating here is a sequence of higher highs. So here we go, higher highs and higher lows. So there's a higher low, okay, and then there's another higher high there, and a higher low over here. Okay, so as you can see, higher high. Effectively, why I'm saying that's a higher high, because I'm going to assume that previously to this movement here we had some sort of formation that this market is literally broken out of. So these two highs here have been taken out, effectively creating a higher high over there. So higher high over there, higher low over there, okay, and then basically another higher high there, a higher low over there, before the market makes another high high over here. Okay, now that's not complete, we're just going to leave it for that. Now, it's right in saying that basically this is a resistance swing, okay, this point over here, where this market has made a higher high, and the correction is pulled in to basically make a support swing, okay, so a swing low basically. And then on the way up, it's made a resistance swing to the upside there as a higher high, and it's made a support swing, a higher low effectively over there. So these rising support levels and rising resistance levels are implying that the market's in an upward trend. As I said, a sequence of higher highs and higher lows provides us with a trending market. Now, just because I've always drawn the ones on the way up, I'm going to draw one on the way down just so we can get into a little bit of the detail. It's a very similar scenario. In this case, assuming this is X, the beginning of an impulse leg on the way down, basically the market then drives through and makes a new low. It then retraces, it rallies somewhat to a certain level before it meets resistance again, and then all eyes on that previous level of support, the swing, the support swing basically, to see how the market interacts with that. and on the way down, basically, we're looking to see if it makes a new lower low, okay? And then looking for basically support to come in and more buyers to step back into the market before the market rallies back up again. And we're looking to see what sort of resistance area is going to be interacted with, potentially the Rapala in this case. And then we're looking once again to see if the market steps back in to continue to the downside, therefore continuing in the direction of the trend, or allows to support, near-term support swing, and it pushes through. So effectively what you have here is a sequence of lower lows and lower highs. So just draw those in quickly there for you guys, so we can have a little bit of a push through. There, lower lows and lower highs. Okay, so here we go. There's your support swing here, creating support basically. Rallies to the upside, creating a lower high, creating a resistance swing, and then basically the market drives through, impulse to the downside. There you have a lower low again, and they're creating another support swing, and basically there's your lower high over here, creating a resistance swing. So effectively what you've got here now is a sequence of lower lows and lower highs, and that's basically what defines our downward trend. Okay, now as we know, guys, on the way up or the way down, you get the market fluctuating between these levels, and each one of those fluctuations in their own right are creating sort of, should we say, support and resistance swings on their way up and down at the same time. So each one of these little swings here, that's going to be resistance, and each one of those swings here, that's going to become support. So, you know, it's right in saying that basically we'd look to do this exactly the same thing, you know, assuming that what we're looking at here is this leg here in a lower time frame. Basically, we're just looking to see how the market's interacting on the way up before it creates the bigger picture, which is this impulse, the longer term impulse to the upside, before the market then decides to correct and basically come back into balance effectively, because it's probably overextended from its previous buying spree on the way uphill. Okay, now as I said, you know, each time you can look at it like this, that previous resistance swing over there could become support, you know, effectively becoming a mini Rapala basically, and these small fluctuation upward drives. Okay, and then literally on the way up again, there's a good probability that that previous resistance area over here will become support on the way down, looking at the fact that the market then makes a lower high, and then we get a break to the downside. Okay, so there we have a zigzag ABC correction before the market starts to then make the next set of sequences. Now, what we're really trying to do here, guys, and the reason why I show you this is because these little fluctuations, as well as the bigger picture moves, are all creating key levels of support and resistance on the way up. Now, in theory, the way that I was showing in our previous example was that we're really looking to try and create as much sort of understanding, as clear understanding as possible about what is actually a strong level and what is a weak level. And the only way to really to define that, admittedly, is to get your eye in by doing a lot of testing and to basically assess these levels. But a simple way would be to say, cool, and it's particularly in this one, it's going to be easy enough to look at that swing there, that swing there, and that swing there is pretty much at the same level. Okay, so it's quite easy to say that that would be a major level of resistance that the market needs to take out. So 3 touches, even 2 touches, is basically a good sign for resistance on the way up. Then we're going to be looking at this market and see how it breaks through there. Now, admittedly, the trend on this case is to the upside, so the pattern that we're dealing with basically being expanding range. We've been looking for the price action down here, or even playing the breakout on the way up there. But we're trying to define the support and resistance. So, that would be strong resistance. Whereas this single level over here on its own, sticking out, assuming that we don't have any historical stuff to the left-hand side, would be a minor level of resistance, basically, that the market needs to take out. So, admittedly, I'll still draw it in, depending on, especially on the candlestick price action that was taking place at that level. So it is not as significant as that. Now, hence why patterns are, more sort of focused upon, because they define an area more clearly. But don't get me wrong, this in its own right is creating quite a good level, especially seen as my drawing quite crudely there. It looks like the market didn't quite make it up into the top area, but it still interacted with it slightly, so still key level. Now, admittedly, as it's broken, that fluctuation looks like it's pulled back in to test it, and away you go. So, a little bit of a case of that as a strong level versus a single peak, basically, or resistance swing, becoming a little bit less of a major level. Now, admittedly, I'm just showing you one trend up. If you marry up a whole lot of information to the left-hand side here, or previous market information and structures and levels of support and resistance, this level could be quite significant in its own right. Now, it becomes significant if it's at a big number. For example, just on this drawing, it looks like it's at 1,500. That's a big, strong level in its own right. Nice big round number, easy to spot. Thousands are another reference which make things easier. Big, even, easy numbers to remember, especially when you get these formations. So a combination of structural patterns created by price movement, those being retested, etc. In this case, at this expanding range here, that's going to be a significant area. Single swings potentially at big numbers, and even you might find something that's overextended. For example, when you get this last drive up, very steep push up to the upside, come into contact with a strong big number and historical highs which might have been created a long time past somewhere up top here, and you'll be looking at to the left hand side to say, okay, cool, that previous market highs are potentially going to be basically where this market climax buys into, overextends, and then we're looking to see if we get the price action correction off that level there. So okay, that's going to give you some information about it. I'll try and show you a little bit more detail about that on the chart in a second. Now, I want to draw a pattern. I'll use the downhill slant here, but I want to draw a pattern because in these ranges, and even in these kind of correction formations, especially when you start to get the upward leg pushing to the upside, you get basically a support, a resistance, and what I call a pivot, a central area in the formation, which is also quite key. So admittedly, as I said, there's a lot of data to the left-hand side, which I can't draw in this exercise now, but just to give you a little vague idea about a range and how some of this information could be quite important to you. So I'll draw it to the downside. Let's just assume the market's making a downward push. Okay, there's our fluctuation, breaks through, makes a new push to the downside, so impulse to the downside. The market then corrects back up again. It doesn't quite make it to the upside, bounces back up again, and back down again, creates support. So double bottom now, pushes up, breaks away, comes back in, pushes back up. Literally what the market's doing here is it's trying to find some sort of significant pattern formation in its own right, but at the same time as what's happening is it's testing this central area as it moves along, okay, potentially before then it breaks to the downside. And remember, the patterns aren't always like I draw, all quite nice and pretty and simple for you. A lot of the time as we spend our lives trying to interpret what's going on, admittedly it's not exactly the same, but I guess that's the whole key about technical analysis, especially when you're trading patterns and systems, is that we're analyzing the chart to establish if we can read the dominant psychology in the market. So admittedly, when I'm looking at this pattern, it's a pretty big mess to start with, but it might take a little bit more of a shape where this descending pattern lines up with a longer term downward trend, for example, and that trend line, for example, could be basically where this market starts to step in and actually sell to the downside. But from a support and resistance sense, admittedly it starts to create a support level down here by the double touch to start with. So that would be a good place to start, by drawing in a support level, a zone effectively that you want to basically see the market take out. On this drawing, it's also at a big number, 10500. So there we go. It makes a little bit of sense that the market's probably stepping, or buyers are stepping in at this level. Now on the way up, as you can see, there's a little bit of a rally to the upside here, still a lower high, still in line with the downward fluctuation, the accelerated trend over here. But then the market breaks to the upside, pulls back in, and then tests this inside level before it then rallies and then creates basically a retest of the previous highs. So, a little bit of a crude example, but an example enough. I can start to draw my zone in there, which I'll look at as resistance, because I've had two touches to the upside, I've had two touches to the downside. Then all I'm looking for now is to see how much more this middle zone here gets interacted with before basically either the highs or the lows get taken out. Now, a good way basically to look at this is in the sense that there's support here. Okay, and then the third toucher basically makes that major support, very strong support, and then you got resistance here, and in this case the third touch to the upside makes this also major and strong resistance. But at the same time as the pivot, there is a pivot running through the center, as I've been pointing out, where this market has historically been basically making swings and interacting with it. Now, so that's a little bit like a house formation. Eh? You got your foundations, you got your roof, and you got your first floor here. And what's happening is, depending on the scale of this whole interaction, yeah, I mean, in the big picture, these swings and price ranges could be quite considerable, but at the same time as in the smaller, like daily charts, maybe in the 4-hour charts, even going all the way down to 15-minute charts, this interaction could be, you know, on a lot smaller scale and in the minor trends, effectively. But at the same time as this pivot running through the center here is key. It can play a very, very important part and be a very successful trading method, especially if I revert from what I was drawn there previously and give you an example of what could happen is that this marker could, break through temporarily just a little bit to the downside before it corrects back up to the upside and basically interacts with this pivot to give us the selling signal, which is when you get your strong sell-off to the downside. And that often happens. You know, you just get a basic breakout to the downside before the market rallies up, and then this pivot becomes the key area of resistance before the market sells it off. So, you know, I look at the Rapala that I've been teaching you guys, which is literally, you know, a market impulsing to the downside. It's rallying up to the upside again, and then it takes out that support level before it rallies to the upside, and that previous level of support now becomes resistance. So, you know, that's all it is. But remember, this level of support, okay, is defined by one swing, maybe two swings, to three swings, depending on what's going on. But if it fails, this pattern here that in this case is only a single basically correction, could be basically giving us a stronger basically resistance level, in which case this actually correction here might rally up a little bit higher up in before it then sells off and breaks on through. Okay, so this is everything about basically defining how you see your support and resistance being the stronger level, particularly in these environments over here before you actually place your trade. So let's try and have a look at a couple of charts. Well, we'll look at a chart here and we'll try and we'll break it down a little bit for you. This is Aussie US dollar daily chart. I'll stick with the daily chart because this is the predominant time frame that we trade. This is the current trend. I'll crunch it up a little bit just to break it up into a little bit of a scenario for us. Okay, so theoretically speaking, you know, we've had a historical picture of a upward trend, basically creating some highs and then turning into what is a contracting range effectively over an extended period of time. This is effectively the bigger picture that we're looking at here, the bigger picture defining, you know, these big swings and these big swings, support and resistance swings. Admittedly, it gets a bit tighter towards the end here. That's a good sign, guys. You know, nice, clear, tight, narrow range basically in the daily price. It means the fight out's getting a little bit more interesting. It's becoming more clear. It's becoming more defined. But even if I just took it on the big picture here and I didn't even go into too much detail here, I could basically say to myself, okay, fair enough, there's my ultimate highs at the top here. Okay, on the way down it's a bit difficult to assess, but I think if you start basically drawing in some support lines there, you'll start to find, okay, admittedly, maybe I'm not quite sure yet, but you know, there's a lot of interaction so far in this area here. So that's a good place to start. Admittedly, we can still look at these other swing lows, but that's a good place to start. And then what we're really trying to do is find a place where this market is finding another sort of happy medium in the center of here. And I'll just draw a vague line here. I might just reset it for us all. But something along those lines there, you have the market pivotally interacting through the center of this contracting range. Okay, it expands initially, but then eventually contracts into this narrow range. So you know, you've got, admittedly it doesn't quite touch in there, but in theory, you know, you've had some interaction over there, you know, interaction through there, the market seems to be bouncing off it again there. And then the key thing is this little bit here towards the end, when the sell-off actually occurs, like I was pointing out in the last instance here. This is the breakout of the range. Okay, so you know, by this time we're actually looking at this range being defined by these support levels over here. Okay, So that would be basically our interesting levels that we'll be paying a lot of attention to, as much as these key resistance areas also will be key to us. But at the same time as that pivot now running through the center here now is also very key to us. So as you guys can see, one touch there, two touches there, three touches there, good strong support. 1, 2, 3, 4, and a little bit of a lower high over here. Good little sign, looking at the fact that that's actually an evening star pattern. It doesn't quite make it into previous resistance. And then what happens is the market breaks down. The impulse doesn't break through, but you kind of get this little lower high from this initial fluctuation or minor trend basically here that gets broken. And then the market comes back into that pivotal area here and then starts to sell, and that's where the push comes through to break through this support level, and then it moves on down to our bigger picture support level over there. So a good targeting method basically in this case to give us that break to the downside. So I'm going to stay with this, and I'm going to try and come in a little bit tighter here. And as you can see, this whole push down, admittedly you got little fluctuations, a little small swing. I'll hardly count that because it's just a one bar pullback. It doesn't actually give me higher closes or anything like that. So I'll discount that as a continuation, and on it goes. And as it carries on, I literally get into this area here before I get a decent rally or a decent basically amount of buying come in, okay, that engulfing candle. So that would be a good area to start by putting a support level in to define what's going on over here. And then admittedly the market's moving at quite an amount of speed and it breaks through. There's our hammer. I can put another support level in there, okay. Now I'm not looking left at the moment, I'm just looking at the simple facts that that's just the swings that are created by the fluctuations on the way down. So those would be considered in my eyes as minor support levels. But at the same time as this market is trending quick, so you're looking at some of the basically price behavior to see how the market will interact. I mean, admittedly, as the polarity test doesn't quite get in there, or Purapala, it just touches that zone from that hammer and the market still sells off from there. Admittedly, in this case, at this first one here, as you can see, the market basically does its impulse and breaks through, and it basically moves up higher and in, and then tests this central resistance area, which was previous support, which was the bigger level which we were talking about earlier on. So that's the definition in a sense about saying to yourself, okay, fair enough, market's moving quickly here, it hasn't interacted with there, but what is it interacting with over there? And admittedly, it's interacting with the price action. Now that's probably one of the things I haven't talked to you about. I'll do it briefly now. I don't want to make it into too much detail, but a combination of dojis, spinning tops, very narrow candlestick formations, they're also an excellent area to consider for basically a level to be defined at. So that is also something that's basically creating strength about this actual sell-off from here. So your Rapala in this case didn't repel from the bottoms of these swings, but repelled from the main resistance area, which was slightly higher up. And if I just look to see what sort of price range there was, okay, 9.6, let's just say 9.620, 9.650, somewhere in that area. So maybe not so much a number significance, but at the same time as key in the form of basically previous structural resistance and even the interaction with price. Now, it never stops exactly on the level, as you guys can see. This has moved through that level, admitting that basically the market is stronger to the downside. Selling pressure is still dominating the marketplace. That's also defined by the fact that this impulse basically is immediately sold back off and another impulse is created to the downside. And then literally what's happening there is we're trying to see if the market is going to hold from this position, which it does, and it sells off again. Okay, so that's one way of doing it. Now let's try and use this little range formation over here to try and put together another case of support level, resistance level, and try and see if we can define some sort of a central pivot and see if it has any significance further down the line as we move forward. Okay, so here we go. Market basically sells off to the downside, so there's your near-term swing over there, which I'll put in. Market then basically rallies to the upside. You get these lovely high test candles here, or star candles. The market then pushes, doesn't quite make a very strong push to the downsides, losing momentum at this stage. Without looking left, you might find there's some significance in the fact that there's some previous structure there. It's also 9,000, which is a big number here, 09,000. So support is definitely starting to be created here. Now that's been interacted with, so that support level is becoming a little bit more serious there now. Okay, you've had a swing low there. The market then pushes through. Okay, we get a new support level being created. And what I'll do is I'll just keep drawing these boxes in, and eventually what these boxes will do is they'll line up on top of each other, and that should also help me define the fact that that's a key level that was interacted with. So this market pushes up, so I get another box basically on top here, because that swing there is literally testing that previous level there. So that this area now, this zone, is becoming a little bit more considered. Okay, the market breaks up slightly, pulls back in, you got a doji there, so effectively you got another swing area there. Okay, pushes to the upside. Now each time, admittedly, this is getting a little bit choppy because this correction here is basically a rising channel, effectively just to the upside, or a flagish style formation. Admittedly, the flag pole's not all that great, but nevertheless, it's basically a little bit of an upward channel, a rally. But each time now, this central area, as you can see here, is being interacted with quite nicely. So that swing there, that price interacting there, it's getting quite strong. And effectively what's happening is the market eventually does sell off again. Okay, impulse to the downside, creating a support level. And at the same time as the rally that's preceding after that, it comes back up, and this whole cluster of candles basically moving through there. This is where the market finds its resistance. Now, as I was saying to you earlier, I'd be looking left to see if those swing lows there would have been something that the market might have interacted with to give me a faster moving sell to the downside. It didn't. It then moved up, and it interacted with the central pivot from this little range that was created here. And admittedly, we got a double top formation before the market sold off again. Now, this pivot here has now been interacted with, as you can see here, because, sorry about that, pushing my chart around. I'll draw in some more little zones to try and make life a little easier to define. The rally to the upside pulls back down. You get your minus swing to the downside, so I put a little zone in there again for you guys to have a look at. Double top, sells off, breaks through that level, market comes up, tests that inside level there with these highs over here before it sells down, and then this double bottom formation, which is a very good looking double bottom formation. It's got some nice space in between it there. Becomes a key level of support in this case, okay? And it's also at a relatively big number, which is basically 8.9, okay? 8,900. So you can see the significance of big numbers. As I said, it doesn't stop on a dime, but pretty close to it. And then what's going on is this level now is becoming a key level that you will want to watch and see what happens, because there's your central pivot. So what we've had is the range basically expand, then basically push to the downside, double bottom here. Those key levels initially acted as resistance over here, but on the way up now, basically we're going to see if that pivot then gets dealt with as key resistance, or if this next level is going to be dealt with as resistance. Okay, and as you can see, the market comes and stops literally at that pivot in the center, the first one we defined, before then basically pushing to the upside and breaking out. Now, admittedly, that level being significant enough, the market then pulls back in and you get a bounce off it there, and it pushes back up to the upside again. So all these levels are very, very key. But the main things, as you can see, is that the market literally has three levels that it takes into consideration when a range is formed. It has the support element, it has the resistance element, depending on where you're looking at. I mean, admittedly, this resistance level, if you pull it across, has enough significance in the fact that this hammer tested it low, those stars tested it high, this high wave candle here basically tested it high, that spinning top tested it high, that engulfing pattern tested it high, and then as it comes across, we have interaction with it again over here as resistance, basically, as this market's trying to make new highs. Okay, so you can start to see how the picture is created. Don't want to overcomplicate things, because admittedly, we just want to understand how we can use this to trade. So let's look at it like this. This is a range. Admittedly, our trading strategy doesn't perform too well in ranges, but depending on the cycles that you're looking at, you might decide that This market has now made a double bottom. So based on the double bottom, that's giving you confidence that the market is pushing to the upside. So now you're looking at the fact that this was your key pivotal area here. The market has taken out your key pivotal area. The market then pulls back in. You get basically an engulfing pattern on that there. If that's your entry criteria on a fluctuation on a fast moving market, you might find that that's giving you enough confidence, and it might give you a 1 to 1 or 1.5 or something before you actually have to pull out your trade. Or you might just hold on to it. You might basically ride it all the way up to there depending on your strategy. But that's how key these levels are. Now, I'm going to just pull this level, that pivot that was in the middle there, all the way across, because I wanted to see if it's had any interaction with it further down the line. And you can see how significant all of this becomes. Look at that. That pivot now, and if I keep pulling it across, becomes one of the key levels for this market to basically sell off and break lower and start the new trend to the downside, which is our new current day trend. Now, I know I've skipped out a little bit here. I'm not going to break down everything for you. Let's do a little bit of just short-term trades here quickly using the system. Fair enough. There's a high eventually comes into, which was a significant structural level which we created from past. So that would have been in itself a bigger picture. A bigger picture Rapala. If you think about it, there's your impulse to the downside. Double bottom market then basically does a harmonic formation up into this previous resistance area. We had that short-term trading pattern over here. Now it's a bigger term pattern over here. So your bigger picture basically swing here. So your resistance swing, nice price action, engulfing candle, and then the market sells off from there onwards. So there you've got a bigger picture trade on your hands if you want to look at it like that. And at the same time as then if you start coming back into the fluctuations here, where you start looking at quite close movements in price, you've got quite a few of these little swings to the downside. So lovely trading opportunity there. There's another Rapala there, as you can see, swing over there, impulse to the downside, market corrects, a little bit of space in between, lovely engulfing candle, sell to the downside. Okay, maybe not so much going on there, and maybe this pivotal area here might have become something significant, but I'm basically just pushing through to show you that this market always acts on support and resistance. Previous levels of support broken in this case, potentially becoming resistance, and then good trading opportunities to sell from there onwards. So admittedly, if you draw this all the way through here as well, as you can see, it starts off with a couple of touches there, some close candles, literally some fighting out going over 3 or 4 sessions. So that's a good example of an arrow consolidation. Admittedly, the longer the consolidation, the more significant the level. In the same way as the tighter a range is, the more significant that range becomes, and the longer the period it basically takes place, it forms a stronger level for the market to deal with. But as you can see, that level there, historically the market's moved up, but as it interacts, it sells off. So depending on how you're going to base your rules on how you're going to get into the markets, that's one way of looking at it. Okay. This inverted head and shoulders pattern here, it's a complex one in a sense that you look like you've got lots of shoulders here. There's a big head here and a lot of shoulders here, but the market starts to create new highs slowly but surely and higher lows. So there you can see the market's trending on its way up, and each one of these, as you can see here, this sort of ascending pattern effectively starts to get taken out, and these lovely hammer formations all the way up here are giving us an inclination that this market's trading to the upside. So, I don't want to get too into all that, but yes, that pivot level there, once again, being reacted as it's broken over there, engulfing candle off it, it does make a nice little push to the upside. Just goes to show it does work, and even a retest of it over here, great looking dragonfly doji here, pushes it not quite to the previous highs, but still, the market reacts with it. Hammer over there still holds it strong, pushes it away. But look how nicely that range is interacting constantly, okay? So we want to see that market's taken out there. Now, admittedly, as this formation runs, we've got highs over here that we want to take out, so there's some key resistance you can create for yourself there. The market fakes out over here, and then basically pulls back in again, and then doesn't manage to make new highs over there. So this range is now becoming quite well defined. On the way down again, we start to create a new support level, so that'll be your short-term support level that you want to take out, and this will be your key level of support that you want to take out. And then literally it's a case of interpreting how you want to trade this from there onwards. There's the breakout, and away you go to the races. Hey guys, I'm hoping that helps. Admittedly, sorry, before I run away, there is a pivot through the center here. Let me not get too rushy there. I'll rather just show you that in every one of these patterns there's a central formation that basically is quite key, and then I'll say my goodbyes. So on the way up, admittedly, let me just try and see something like that. Okay, on the way up, not quite interacting with it there. Market pulls back down, interaction with there, comes down, tests the bigger significant um, pivot which we had from structure to the left hand side before it basically then rallies to the upside. Market, as you can see, price action interacting with it quite nicely there. Market comes down, interaction there, interaction. So you can see that's quite a significant. So you got to pivot even in that range there. So we're unlucky to see the market didn't bounce off this level here, come back up into something like our pivot that's been created from this range now before it sells off. So we're unlucky in that. That would have been a nice opportunity. But at the same time, as there was a little bit of a level running through the center over here, which the market has interacted with in any case, and off it goes. But fair enough. We were looking, as I said, for some sort of repaller. This pattern is repelling this range to the upside. I guess we're getting into a lot of detail again, basically how you define things. But for now, I'm hoping that helps you get some support and resistance information. And on our session tomorrow, on Monday night, we can go over it a little bit more and discuss a little bit more detail about how we basically can interact with it more. Okay, guys, I hope you're well. As you can see there's a little trade thing there, but hope you're well. I'll speak to you soon. All the best.